Good evening, ladies and gentlemen. Again, let me quickly cover the Russell 2000 and the Nasdaq Composite, the RVX, and the Vix in the next 10-minute segment. So here is a chart of the Nasdaq 100, and it's very constructive. I mean, this is a constructive chart here. There's not much to say. Look carefully and just learn. You got a triple bottom here, which held place, 45.45. You got this movement here coming along, and at this point it looks very likely that the Nasdaq is basically going to break through 4600. Make a third time, let's call it, 1, 2, 3. Fourth time it hits it, there's a very strong possibility that it breaks out. And there's enough Nasdaq stocks that are still out there, high beta momentum stocks that are still far from highs. Case in point, Priceline. Alright? As I've clearly shown, there's a certain method to the madness, okay? And they do these things here. They always leave a couple of these large cap behemoths, momentum stocks, on the side, very oversold, while the rest of them are making new highs. Then they come in and buy the crap out of them. There's a whole bunch of them that are very far. They're still down 40-50% from their highs. Ones that I picked way off at the lows. FireEye, Stratasys, Splunk, LinkedIn, Twitter. So what I'm getting at is these stocks were left for the dead. And then all of a sudden they become everyone's favorites. It's just a game, alright? So the bottom line is, that's what's going on now. That can drive the Nasdaq to new highs. So, if you look at this chart, there's really nothing to talk about. If you want to draw a channel, let me show you this. You want to draw this channel? And the reason I do these things is because it's worked before. 47.20. Once we entered this channel, let's call this as there. Okay? Once you entered this, it's going to get here, which is slightly higher than previous high. Okay, new all-time highs. And if you enter this channel, that's a bear kill zone. Alright? All hell breaks loose. Can it happen? Can happen. Why not? No one wants to believe that the global economy is improving. No one wants to believe that China can actually, pull themselves up by their bootstraps. No one wants to believe that Europe can actually improve and that global hostilities can ease back a little bit. There's never going to be peace, but there can certainly be calm, which is good enough for the markets. So this Nasdaq chart looks really, really good to me. Unless we break down below 45.43, in which case, see you later story. We're going to fall straight into this gap right here and engage the 200-day moving average here on the 60-minute chart. Let's look at a daily chart. The daily chart is also showing that it can possibly move higher. The hourly chart definitely can move higher. The daily chart is showing some levels of fatigue. Compq curve is saying time to rest a little bit. The short-term charts, which can last anywhere from 5 days to 2 weeks, which would be about 10 trading days, are clearly showing that we possibly wants to move higher. Let's take a look at the Russell 2000 index, my favorite. Russell 2000. What can I say? I hope everyone can see this. It's a little bit blue, right? Too blue. Let me change the settings here. Background color. How about this? Ooh. I'm really blinding myself here. What do I do with this? Do it like that or do it like that? Let's just keep it black. Okay. Alright. Just, you're going to have to do with this. Alright. So what we see here is, to me, this pattern is very tradable. And that's what I did. Okay. This is a pretty strong floor. Around 1153, 1156. So you got couple of these rounded, couple of these bottoms. At this point, I believe that it probably goes back and tests this downtrend line, and that's around between 1176 to 1180. Okay, if it does break out over that, all hell breaks loose. It's going to do this. This is a pattern symmetry. See this move here? That move can start anywhere from here. All right, same pattern. This one and this one. See this pattern here? This pattern is basically a you could call it an inverse of this pattern. Okay, stop making it up. It's just the way it is. So let me get all the lines out of here. Hold on, to make this a little bit cleaner, so everyone can see it. All right. So you got, if at this point, by this week, I believe we test the underside of this 50 moving average on the 60-minute chart. That's around 1172. All right. One of our best TF traders out there, Mr. KG, give a shout out to him. Is a very good reader of the futures charts on the Russell 2000. And we were talking on the side, and basically we're looking at 1172 as the first stop. That's 8 points from here. It's going to find a lot of resistance at this level. Okay, and if we do manage to break out over that, then we are going to basically come up and fill this minor gap that's out here. That's around 1185. So one step at a time. If we fall like we did yesterday, this type of move down again, then my bull case becomes harder to reach. There's a gap here that will get filled. That's around 1143 to 46. That I believe needs to get bought hard. So so the bearish pattern would be this, and a fall here. All right. The bullish pattern would be. Did I get the drawing tool here? Okay. The bullish pattern would be this. Sorry, it came down here and then it moves up here. Alright, so we'll see what happens. Let's look at the internals to get some direction as to what might be going on. Again, playing the IWM puts and calls is extremely lucrative. Shown this repeatedly. So you can always test your hand at trading some of those options. What am I doing here? Okay. I want to show you something very clean. Notice this histogram went green today. If these histograms keep on going higher, like it normally does, accelerates a little bit, like it did here all this time, it's at least a couple of days left, right? They normally don't end in one day. So that means it at least gets to about the 1172 level. That's a good deal of money on the Russell calls as well as the IWM calls. Let me no more covering that. I've shown that clearly. Compare that to my other charts I put through all through the day, and you'll see what I mean. Let's take a look at the inverse of this, the RVX. Now this is what I was calling on earlier, and I've been doing that daily, intraday, when I see this type of patterns. That's my first sign to get in there and get in there hard. Did that today. Fantastic move. So what do I see? On the hourly chart, which is a good one to monitor, I saw this thing hit the 200-day moving average, and when it gets closer to that, look what happened. It got whacked. Okay, look at this. This was the first sign. This at this point, if it breaks below 1725, is going down. Could very well happen by Friday. So just letting you know. That's a red candle. That's not a chart you want to buy. So that means the market's going higher. You understand the inverse correlation between this and the thing, just like the VIX and the market. This is the Russell 2000 VIX. So that's learn how to read these charts, and it'll tell you directional bias in the market. You just can't be looking at price and saying, "Oh my God, everything's falling apart. Oh my God, it's such a great market." You have to look at these things, and this is what really makes the real money. But don't get too good at it, then I'll be out of I won't have this great clueless service. Then everyone's going to be a pundit in reading RVX charts, right? So I'm going to be displaced. Let's take a quick look at the VIX. If I have time here, I might get cut off, warning you. The VIX, the Vixen, same story. Can't really, this is the first tell. The market was going lower. The VIX was going lower.